to this special dual edition of the Note Closer Show and Note Night in America. 20 questions for investors. This special episode is dedicated to all you newbies out there who are having a hard time raising private capital. Recently, about a month ago, I attended an event in Houston, Texas with the legendary Brad Blazer from Capital School, and he had a really good insight into raising capital. I mean, from somebody who's raised a couple $1 billion in the oil and gas and real estate industry. I enjoyed his event. It was really good. And he shared the 20 questions that he likes to ask. And I was really kind of blown away that there's a lot of similarities in what we teach when it comes to talking with your investors, prospecting, making phone calls, reaching out to IRA investors. There's a lot of great stuff. And so I thought it valuable enough that we should do this special episode on the 20 questions that you should be asking your potential investors to help build rapport and really take your capital raising to a whole new level. Now, you're not going to ask all these questions on the front end. These questions are primarily designed to ask investors or prospective investors in the first and second phone calls or meetings that you're actually talking with them. You know, you're not going to ask all 20 of these questions right off the bat. Hey, do you want to invest? You know, that kind of stuff. But these are designed to help build rapport. And I thought I would go through them here one at a time, kind of touch base on each one. And if you want to take notes, feel free. We're going to put all 20 questions in the message on the YouTube video. Also, we're going to put it in the podcast episode as well for you, so you can watch, learn, take it with you, and have fun with it. So feel free to comment as well, ask questions. We always like to monitor those questions. We're glad to answer those any way we can. And if you'd like to get more information about raising capital or note investing, please feel free to reach out to me at talkwithscottcarson.com or reach out to us at the website at weclosenotes.com. But anyway, guys, glad to have you here and join us on this live webinar. But anyway, our live podcast recording would be another way to put it as well, too. But these questions are designed to build trust, rapport, and help you build your relationships and come from a place of intelligence, not ignorance. And I know for you that are brand new out there that have never raised capital, it can be very intimidating when you get to those questions. What do I ask? What do I say? What don't I say? And so the whole thing here is just take it easy, role play a little bit. That's why we're giving you 20 questions. Some of these questions you're going to ask me, you may not, depend on what your prospective investor says to you. The most important thing is when you ask a question, listen, ladies and gentlemen. It's so important, because if you ask good questions, your investors will give you good answers, which they'll tell you exactly what their hot buttons are, what their fears are, what their concerns are, how experienced they are, or how inexperienced are they. And that helps you tailor your presentation, tailor your pitch deck, or tailor what you say when you're talking about case studies or investment opportunities on the third and fourth conversation for you. But anyway, without further ado, let's get rock and rolling. The first question that we want to go through here with you guys is pretty simple and makes a lot of sense if I can get my PowerPoint slide rocking here. Okay. First question is what have you invested in, or have you invested in whatever you're proposing? Have you invested in notes? Have you invested in real estate, oil, gas, etc. before? If they say yes, great. How did that turn out for you? Or no, okay, no problems. But have you invested in notes before? And if you have, how did that turn out for you? That's a really important question, just to kind of see, because that's going to tell you if you're dealing with an educated individual right off the bat, or you might have to do a little more of a deeper dive into educating that individual on more of the nuts and bolts. But also, it can tell you if they've got a favorable opinion of that asset class. And if they've had good experience or bad experience in the past, good, hey, should be easy for you. Bad, you may need to wow them a little bit more with what you've got going on. And that would lead to, if they had a bad experience, leading to another question, well, what happened with that? Number two question, when you invest, what are you looking for? Are you looking for appreciation? Are you looking for income? Or are you looking for tax benefits? Because people will invest for a variety of things, especially in today's world. Many of them are looking to beat inflation. Depending on how old they are, they might need that money for income to survive on. Or they may also be looking for something they invest in that will help them eliminate what they have to pay Uncle Sam on a regular basis. You know, or they're looking for tax benefits as far as investing in something using their qualified investment plan, like the Roth IRA, so their investment can grow tax-free or tax-deferred if it's a traditional IRA. So just ask these questions, practice them, and you'll feel a lot better when it comes around to actually having those conversations. Number three, what's your time horizon? Are you comfortable with an investment of 3 to 5 years? Some people don't want to have their investment tied up for 3 to 5 years. They're looking more for like 90 days, quick flips, mezzanine loans. If somebody's been in a CD, a certificate of disappointment or annuity, they're going to have their money tied up for at least 12 months, if not 5 years or 7 years. So I always say, are you comfortable with an investment of a short term, 3 to 5 years? When somebody thinks about note investing and they're not new to it or don't understand, they may think 30 years. So that's why I always say, are you comfortable with a investment of 3 to 5 years? We all know a year can fly by pretty fast, and 3 to 5 years is actually a pretty short paced time frame, considering a lot of the other options out there for you. Okay. Number 4 is also an important question to ask. What has made the biggest difference among your most successful investments? Now, what does that mean? Does it mean that they've taken an active approach? Are they passive? Is it good management? Do they trust the individuals? Was it just the right time at the right place? But that's the question. Think, what has made the biggest difference among your most successful investments? And then the opposite side of that, maybe what's been the biggest difference in your failed investments? Did you invest in something you didn't understand? Was it the market crash? What was going on? Okay. I think that's pretty explanatory, but ask and listen. Don't ask and then wait to ask again. Ask and listen. Number 5, tell me about some of your most successful investments. Very similar to the previous questions. This is a different way to phrase it. Tell me about some of your most successful investments. Was it because it was short term? Was it a quick flip? Was it you hit the stock market price? Were you one of those gamers in GameStop? What was it that was successful about it? Tell me about it. People love to talk about successes, not necessarily their failures. All right. Number 6 is also very important here for you guys and gals out there. And like I said, these questions are going to be in the description. We'll list them individually so you can take a look at that. And if you want to copy paste them and add them to your deal flow, your capital raising procedures, feel free to. Number 6, what is your top concern when it comes to investing? Is the market's going to crash? Is it capital appreciation? Is it less risk? Is it making sure that the principal can be returned? What is your number 1 or top concern when it comes to investing? Number 7, if you could own this in your IRA or qualified plan, that means like a 401k, a 403b, solo 401k, would you invest? Yes or no? Number 8. And this is also, let me come back to your number 7. Number 7, if you own this in your IRA qualified plan, who would you invest? And I would also ask the question, who do you have your qualified plan or your IRA with? Like I was just talking on the phone with a guy who was talking about, I got my IRA, I want to buy a note, and it's with Fidelity. I'm like, that's great. I'm glad you got it with Fidelity, but you can't use that to buy a note or a piece of property. You're going to need to roll that over into a qualified self-directed IRA custodian or trustee, like Pensco Trust, Mid-Atlantic Equity Trust, Rocket Dollar, depending on what, depending on kind of where they're located in the country and stuff like that. Okay. So good to know that 7A and 7B, I guess you could say on this one. Number 8, who are you connected to that we should meet? Now, this is more of a referral question after they invest, but I wanted to bring this up sooner than later because many people forget to ask for referrals. So if you're talking to somebody and somebody's excited about what you're doing and they're ready to start investing, it's great. Hey, who else are you connected to that I should talk to that you think would find value in this? Okay. Or we should meet. It's pretty easy if you're doing this at like a networking club like BNI, or if you're talking with somebody. Hey, do you anybody at your job is interested in this, if they've got a career or something like that, or who you connected with or networking with that I need to talk to, that we should meet or could get together for lunch, or should I get an introduction to? Okay. It's literally asking referrals because so few people ask referrals. Okay. Number 9, this is an important question. This is a true question to see if they're going to have enough to invest with you. What is the typical size or amount of the investments you make? Size might be number of shares or the dollar amount, of the investments you make. Oh, we invest in $50,000 bunches or $100,000 bunches, or I like to buy 1,000 shares of stock, something like that. This is important. If somebody's got less than 20K, they shouldn't be investing with you. They probably need to raise a little bit more money to do it. But this is an important question. You got to ask this really on the second, first or second phone call. You can't wait till you're pitching on assets and you realize that you're pitching on $50,000 asset and they only got 10 grand. Okay. It's also important too to clarify. Like I talked with a guy and he said, "Oh, I got $100 in my checking account," or he was, "I got 100 in my checking account." I'm like, 100 in your checking account? Is that $100? He says, "No, 100 grand." I'm like, okay, big difference. Let's get that moved over into something, into a chunk of that into self-directed IRA or something. All right. So ask, what's the typical size amount of the investments you make? If they're brand new, they may not invest in anything. That's where you would maybe say, well, what do you have that you think you're looking to put to work? Okay. Number 10, as we get halfway to the halfway point, how diversified do you think your investment portfolio is? Is it all in real estate? Is it all in the stock market? Is it all in mutual funds? Is it a certificate of disappointment? Is it just in your 401k from work or your previous 401k? Do you own any real estate? Do you own any gas? How diversified do you think your investment portfolio is? Is it all real estate? Is it all cash? It's good to ask that question to let them sit there and think about it. Okay. Number 11, are you looking for less volatility in your investments? Would you want something that has more predictability to it? This is a great question when it comes to talking about performing notes or non-performing notes. Non-performing has a little bit more volatility, as we can agree to it, right? There's not going to be a steady cash flow to it initially. It could be, but you may have to foreclose and go that route. But if they're looking for more predictable income, that's going to be something that's you want to put people directly into a performing asset. Either they're lending you money at a flat rate, or you're putting them into a performing note that's paying them on a monthly or quarterly basis. That's a really good question to ask. Are you looking for performing or non-performing? It makes you look a little smart. And of course, feel free to tweak these for your cadence, for your wording. Sometimes you go, are you looking for more volatility? You may sound like an idiot. And that was one thing that happened when I was a banker. I had all these new financial advisors coming and asking these big high dollar questions to blue collar, no collar people. And my clients would look at me like, what the hell is this guy saying? He's speaking Latin. And I'd have to explain it. And they're like, oh, yeah, well, I would like that. So always make sure you're speaking to your clients, not down to your clients. Okay. It's very important. You don't want to come off as being arrogant. You want to be knowledgeable, but also be able to speak to persons. The worst thing you can do is speak to somebody and they not understand what the words they're looking at. You can tell by their eyes glazing over them, starting to look away during the conversation. Okay. Number 12, very important one here for you. And you're going to laugh a little bit about this. Can we do anything to improve our presentation or pitch deck? And this would be something you would do after they've invested, just getting feedback. And I always like to get feedback. If you've been around for a while, we send an email out once a year. Hey, how are we doing? What can we improve? Same thing. Can we do anything to improve our presentation? And you'll be surprised. Sometimes it's maybe, hey, I couldn't see the presentation so well, or this didn't make sense. And if somebody will tell you what's confusing about your presentation, listen to them, because many people won't. If you can get somebody to be honest about what was confusing your presentation, or that you went too long and rattled on about something, it's important. That feedback is golden to make it much easier for you to present. And like I said, you don't really want your pitch decks to be more than really 10, 15, 20 minutes at the longest, okay? Number 13, how does this fit within your other investments? Are you already an active real estate investor? Are you also an active note investor or whatever? How does this fit within your other investments, okay? It's important to know, what do they experienced at? Is it fall in line with everything else, or is it going to be kind of outside the box? Okay. Number 14. And I hope this is, like I said, if you have questions, please type them in the chat roll. We make sure to answer those questions as we can. This falls in line with number 13. What other investments do you have? Do you have, CDs? Do you have a 401k? You have IRA? You have stock, mutual funds, rental property? Have you done some private lending? Just ask them some questions and then be quiet. They'll tell you, based on what their responses are, what type of returns they're looking for. If they've got money sitting in a checking or savings account making 0, they'd be happy making 6 to 8%. All right. Or even 4% in a lot of cases. All right. If they're an active investor and they're getting, private lending at 10 to 12, then you got to come in at 10 to 12 to be desirable for them. All right. But what other investments do you have? And then be quiet and listen to what they say. Okay. Number 15. How important is liquidity to you? This is an important question. This goes back to the whole 3 to 5 years. If somebody needs their investment to be liquid where they can exit at a given time, you probably don't want to put them in something that's going to tie it up for 3 to 5 years. If you do, make sure you put some penalties if they go to withdraw. But if somebody needs liquid access to their funds, probably not going to be an important thing for you to do. Like, oh no, I've got $100,000 and I'm just putting 50K with you. I'll be fine. I don't need this stuff to be very liquid as long as it that 3 year period. All right. No, I've got a big expense. I'm sending my kids to school in a month. I'm going to need access to those funds pretty fast. Probably not a great person to have invest in your fund or your deal if they need to pull the money out or they need the money to stay liquid for you. Now, you don't want to be doing like El Chapo or something like that in gangs where I need my money to be liquid. It reminds me of the scene from Casino Royale, the James Bond movie where the guy pulls up the African crime lord with a trucks full of cash and he gives it to the criminal who's taking the money and loses it all. He needs to be liquid and access it anywhere in the world. And we know how that movie turned out. Number 16. What value might you add to my business other than an investment? Can they contribute expertise in any way? And this is something I think we forget about. I know that when I saw this question, I was like, that's a golden nugget there. Because I think we get so used to, especially as entrepreneurs, doing things ourselves, and we don't necessarily often realize that there are our investors or the people that we're working with may be potential great team members in one way or another. Maybe great at being on the deal with you. Maybe they're great at bookkeeping. Maybe they're great at raising capital as well and being added value to your team, or they understand the business and want to get into it and can help you manage a property or two. So this is I put a star next to this number 16 here. Can they contribute expertise in any way? And you see this happening a lot of multifamily guys who want to get into multifamily. They've got some money, they can raise some capital, but they need to add something there to be a part of the team. So how can you contribute? Can you be on the board of advisors for me? Can you be on my board as you get growing? Those are some things that are very important to you. Okay. Can I bounce ideas off you? That's a different value. Do they own? What are their other investments? Are they a realtor? Are they a mortgage broker? These kind of things. They have access to other clients, or it could be access to your team, or rehab crews, stuff like that. Very important to think about. Okay. Number 17. As we're getting into the final couple here for you, ladies and gentlemen, I hope this has been valuable for you. How important are the tax benefits of an investment? Would you be interested in an investment that can reduce your taxes? And this is an important thing to think about, that how important are the tax benefits? Do they want to pay more taxes now and less later in life, or they don't want to pay any taxes on the money? This goes into, can it be a self-directed Roth IRA or a Roth 401k versus a traditional IRA or a traditional 401k? So knowing how important the tax benefits are of what they're doing. Do they need to have something in a 1031 or put some investment into a 1031 exchange to flip it? That means being real estate couldn't be a note aspect of things, or do they need to have some access to some other things? So this is important to keep in mind, how important the tax benefits of an investment, because that can actually add an unknown number, an unknown return that you just don't see in dollars and cents initially. Number 18, very important to know if they're the decision maker on this one. Do you rely on anyone else in analyzing or reviewing your investments? Now, are we talking a CPA, financial advisor, attorney, spouse? All right. And feel free to volunteer to send the materials to the other person as well. I'm glad to send this to your attorney, your CPA, or whoever it might be to review it. Now, financial planners aren't going to review anything outside of their book of business. They can't do that. Can't give any advice. So, but it's good to ask this to make sure that they're the decision maker, that they can make the decision. Or, I need to talk to my attorney, or I need to talk to my accountant to see what's available and go from there. So it's important to know and ask this question, because you don't want getting ready to expect somebody to close and they say, well, I need to run this by my CPA. Well, ask this on call number 1 or number 2, so you know. Number 19 kind of goes back. Are you looking for income at this stage in life? It's important to know this. If your proposed investment will generate income for someone, like if it's going to be monthly or quarterly payments, or they're going to be getting rents or something like that, are you looking for income at this stage in life? It's important to know, because I'll give you an example of, if somebody's investing in a non-performing note, we may not have payments coming in for a little while, and we may need to structure that deal where we don't start making quarterly payments until the borrower starts paying, or we foreclose and then sell the asset off. If they're looking for income, they need to be probably more on the passive invested side, so it's a regular stream of income to them. So ask this question: looking for income at the stage in your life where you at? I mean, of course, if they're using a self-directed IRA, they're below 55 or 59.5, they can't touch that money. So keep that in mind when you're talking with your investors about kind of what age they are. How, don't ask them, hey, ma'am, how old are you? That's never a good thing. You can often tell by getting a feel for people if they're at that age in life where they're looking to bring some income in or live off of it. Okay. Number 20, what is your tolerance to risk in the investments you make? Do you want any risk, or you want it pretty vanilla? Non-performing notes might be a little bit riskier, higher returns, but we know that you're going to buy it at a cheaper price. So there is a little bit of risk involved, but just going through that and that's one thing, ladies and gentlemen, if you're investing in real estate, it's an investment. It is not called a guarantee. All right. It's an investment. Something can go wrong. I had a call today with a student of mine who she lent money to a guy. Her dad was a second lien holder to a guy in a fix and flip, and the guy walked away from him. So she's having to foreclose on the deal. And I asked you, I said, well, have you had something? She said, I've had some good deals. This is the first deal that's gone south, and I'm okay with it. We are in a good number. And that's one thing to look at. That doesn't mean you avoid the risk in it. You address it and share with your potential investors how you're going to overcome that risk, or what safety measures you've put in place with being able to foreclose. You have attorneys, you have insurance in case of an act of God, some of the things like that. But anyway, that's the 20 questions. Let's do a quick little recap here. Number 20, what is your tolerance to risk in the investments you make? Number 19, are you looking for income at this stage in your life? 18, to rely on anybody else analyzing and reviewing your investments. Number 17, how important are the tax benefits of investment? Number 16, what value might you add to my business other than investment? Number 15, oh, come on. Let's see here. My PowerPoint got a little stuck here. On a roll there. Come on now. Oh, goodness gracious. Don't you love that when that happens? All right, there we go. Looks like we're moving now. Well, we were moving. Well, we'll put the whole list in the chat roll below there for you, or in the comment section of this stuff here. But those 20 questions, very powerful for you to use. Look at them, role play, get with your friend. I had a great call again with a buddy of mine, previous mortgage broker. My buddy Boyd we were talking the other day. He was literally talking. He goes, I can remember you playing on the phone or role playing in the office in front of me, or asking questions of people and investors. And I kind of had to chuckle because a lot of these were the same questions, or very similar nature of it. So those 20 questions, I hope those are valuable. Like I said, if you have any questions, any concerns, it's always good to reach out to us, ladies and gentlemen. We're here to help you any way that we can, one way or another. So make sure, if you're listening to this, make sure you subscribe to the podcast, subscribe to our YouTube channel if you're watching on there. And then, of course, you can always book a call on my schedule by going to talkwithscottcarson.com. That's talkwithscottcarson.com. Thank you for listening. Thank you for being active here on the special dual episode of Note Night in America and the Note Closer Show podcast. Go out, take some action, everybody, and we'll see you at the top.